Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein with your weekend edition of your metals update for this Friday, the 25th of August, 2017. We're around 2:25 p.m. Central Daylight Time. You know, it's an interesting time in the metals, and I'm bothered. I had another analyst come into my office today who I think is quite good. And he said, Ira, have you looked at the gold market? And I said, I have. And he said, are you bothered by the chart? And I said, I am. I said, it keeps going to 1,300 and can't seem to pop through. And it just sort of stuck here. It's consolidating, but it's overbought in the process. And he came in, he says, you know, I haven't seen this in a while, and when I've seen these charts, formations, I don't like what I see. And we both have the same school of thought. Does that mean the market won't pop next week? Nah, we're just other two analysts. What do we know? When we take a look, though, at what's going on today, we have the Jackson Hole event getting behind us. As expected, Ms. Yellen said nothing. She stayed right to what she said she was going to do. Nice speech. I don't think it was good enough, in all honesty, if she is not going to be Fed chair again, to go down that this was her culminating speech. I think she's done a wonderful job as a Fed chair personally, and could have been a different type of speech. But she didn't shake up anything. I have not yet seen what Mr. Draghi's saying or going to say, so I don't know what to tell you there. I can tell you that the market thinks that what he's going to say is going to be friendly for the euro currency, bearish for the dollar. Bearish for the dollar gives a little bit of a boost to the gold, the silver, and the other metals. I think you'd agree with that. It might also give a little boost to the stock indices. When we come to the gold on a monthly chart, I wrote a big report in June. I can't believe people are still accessing it, and I haven't been wrong. The market is stuck at the 18-month moving average of closes. The question is, can it challenge up here the combination of the upper Bollinger Band and the 100-week moving average, not 100-week, 100-month moving average of closes in the green? The trend? Well, you got a higher high and a lower low. It hasn't broken out of that. But in all fairness, each bar on the chart represents a month. And at this point for the month, and we still have some days next week, with another 4 of them or so, you're up $26 for the month. The bias of the market via the momentum is the right word, is still up. The bias is up because you're over the 18-day average, but you're not getting that pattern I quite want out of it in higher highs and higher lows. When we go to a weekly area chart of just closes, you've gone from the break low 1209.70 close to now where you're at right now as we're talking, the 1292.70. So the market has come up about $83 overall. Not bad at all on a weekly basis. When we go to a weekly bar chart and we see what the market's done, just look at this 1300 area. That's your resistance. When we put the swing line on the chart, it's bullish. The market has higher lows, higher highs. What would break the pattern is market getting under 1251.40. Barring that, the market is in an uptrend. The market is also trading up and over the 18-week moving average, which happens to be over the 100-week. Bullish. What else? Bias is up because the market is over the 18-week moving average of closes. When we look at Bollinger Bands, the resistance is right here, 1301.90. Now, eventually what has to happen, and will happen, 2 elements I'm saying, is the sideways action in the Bollinger Bands is going to give way. The market either breaks out to the upside or the downside. It will not stay in this forever. If it did, well, then you're stuck between 1212 and 1300 forever. It won't do that. Momentum-wise, we still have momentum to the upside. Now, I don't use the slow stochastics on weekly charts the way I do on a daily. This is just saying momentum is still up. I throw out the idea that it's overbought. I go to that on the daily chart. So momentum up, trend up, bias up, but resistance strong, 1301.90. In the silver market, The silver market's got higher lows, higher highs. It's pulled back to major support zones of the combination of the 100-day average and the 18. Now, we haven't had a bullish crossover yet where the 1667.50 gets over the 100. When that happens, it'd be another bullish event. Right now, the market's got upside bias. It's over the 18-week average of closes. Momentum is pointing up, and the trend is up. So everything's friendly here. If it can mount a rally, potential might be the 1772 area, which is the upper Bollinger Band. In the copper market, this is a market that is riding the upper Bollinger Band in an embedded reading in momentum. And the job that it's done is you had these rallies, you pulled back last week, closed underneath the upper Bollinger Band, and you're back over it today. So it is not an excessive amount of times up and over it. Still a powerhouse market. And you know, that says good things ultimately, I guess, about what's happening in other metals such as aluminum, zinc, and so on. So manufacturing economies, somebody wants this copper, prices are rallying. When we get to the platinum market, there's a lot of talk here that we might eventually see now platinum and palladium changing positions for car manufacturers, which hasn't been done in a long time, but that's the talk. You've got a market that has got upside momentum. Remember, I don't consider overbought, oversold on the weekly chart. I see higher lows, higher highs. The market pulled back for support to the 100-week average, found it, and it's still knocking on the door of upper resistance 992.5. Now, should the market get under 934.70, you would break this pattern on the chart of bullishness in the platinum. So at least I can define for you a number that should not be seen, and if you have it seen, it would then give you a potential pattern of lower highs and lower lows. Should you close under 942.60, then I'd even say the trend is turned down. Those are the what ifs. Right now, everything's pointing higher with the resistance 992.40. In the palladium market, this has been another one of these powerhouse markets. It too has now, if we count how many weeks or over consecutively where the readings of the Bollinger Band, slow stochastics are over 80. You got there, but not the week before. So next week will determine, can this market do what I call lock in the embedding, but the momentum is still up, a full-fledged bull market, hit the upper Bollinger Band, paying attention to it, and that's all you can say. In the dollar index, I see nothing bullish on this chart. Lower highs, lower lows. Today was an important day. It was a hard one to go through, but nothing there is moving the trend. The momentum is locked in bearish, bias there. Everything's still bearish. Next support zone could be the lower Bollinger Band in this market, which could be back below the 91 level. So as I'm looking at everything there, I don't get too excited about the markets except one thing, these price counts. Now, I know that a massive amount of you, and I use the word massive, we've really put out over the year and a half a lot of people on a free subscription to price counts. Like all good things in life, it's going to end. And here's the beauty of it. You can't replace it. We're the only people that have price counts. So if you've gotten accustomed to it, it's time to become a paid subscriber. And you'll be able to go back on our archives. You don't just get these every day. It's going to be quite a bit. If you have never tried it, we want to give it to you so that you can decide, does this fit into your tool chest? Now, as you can see here, we're giving you first count, second counts. Let's assume a market sets up this pattern. And there's nothing super unique about the pattern you can't do yourself. There's nothing on price counts that with our charting software you can't do yourself. But if you're looking for our commentary, going back in time, our different libraries that show how this stuff has worked in the past, well, then you want to be able to get to all this. So you give us a call, you go to our website. You will receive, if this is the first time you're signing up for it, our write-ups, explanations as to how to do it in videos, by the way, as well, and then we'll give you the software so you can do it yourself. As for receiving these over and over every day now, different ones, that will end August 28th. So, like I said, all good things come to an end. You can call us and ask us about how the subscription works, the pricing of it. It's not expensive, believe me, but it's time for us, if you want it, to take it away as a free tool. Have an account with us. Do something with us. We'll work things out with you. As for just free, that's going to end. You can even, if up here, if YouTube has fixed its cards, click that icon. It might work. I don't know. Underneath us, it will say on a number of websites, click here for Ira's free offers. Click there. And, of course, you know you can go to these different ways to sign up. I'm Ira Epstein. You have a great day, and I will talk to you all come Monday.